Hello traders, welcome to another daily analysis for March 2nd, Thursday. Right now it's Friday 1 a.m. Eastern Standard Time, so we're about 2 hours prior to the London Opens. So let's get into it. So today we started the London session with a notable Aussie weakness. Now that was due to the previous Asian session, so the last Asian session. We had a negative trade balance, which we saw a large drop in export and particularly iron ore. And as many of you know, iron ore is one of the most important commodities for Australia. Basically, that was pretty much what's been holding up this commodity trade balance for Aussie. So of course, that was not a good news, and market consecutively sold off Australian dollar all the way from the Asian session until New York session. Even until now, Australian dollar still the weakest currency. Now, I wouldn't say it's not a big surprise because Australian dollar was already in a very high level. So it's going to drop. When it drops, it's gonna drop very, very largely. But I still think this movement, of course, is a little bit excessive, emotional, because aside from that, we just had a positive GDP a couple of days ago from Australia, and if all things are equal, Australian dollar is still a very strong currency, especially versus other weaker currency. So I did actually dip both Aussie in. I have few pending orders, some of the currencies. Then that's just against some of the trade I do, sort of like a risk event, post risk event. When I saw this kind of excessive emotions, I'm trying to getting at a nice level. But of course, before as I mentioned, the biggest problem for me is always the management. Right now, I feel like a lot of my fundamental analysis was spot on in the micro directions, but however the execution was really not well. So that's what I'm trying to get better at. So I do think in the general direction, this kind of downside movement is just temporary. We should see Aussie regain strength, especially versus other currencies, such weaker currencies such as Japanese yen, Swiss franc, euro, or even British pound. London session, we had a pound UK construction PMI, which came out in line, and we also have a flash CPI and core CPI for Eurozone also came out in line and slightly better. Now, notably is that the flash CPI year on year is right now at 2%, and that's exactly the target of ECB. However, ECB already mentioned that they can tolerate a slightly higher inflation, as they kept saying that the inflation was fueled up by a temporary high energy price. So this unfortunately will not change ECB stance, but just tell you that eventually, if Eurozone kept performing well, then ECB will stop the QE altogether. Then that's when the euro will regain strength. But before that happens, we still think euro is looking to the downside. PPI, of course, from Euro also came out slightly better. Unemployment rate was also in line. So yeah, fundamental data-wise, Eurozone have been performing quite well. But if the central bank chose to ignore it, then that's just the way it is. Always understand that central bank always takes more priority than the fundamental data. So if you wanna sort of line up in like who has more influence, it's always the central bank. Then it's the fundamental data, and then it's something else. New York session, we also had a GDP data from Canada, both month to month and quarter annualized. And month to month came out in line with expectation, and quarter annualized came out better than expected. So of course we saw a little bit CAD strength on those data, but both figures were still lower than the previous number. For Canada was another example that the recent data had been quite promising. However, the central bank is very dovish. And if you have this kind of conflict, if you're wondering which side you should put more emphasis on, it's always follow the central banks. And we'll talk about Canadian dollar later on. Let me just go through it. The equity market today was mixed. We got a negative closing for European market, also a little bit down closing, positive closing for US market. Right now, basically, the notable thing is that the US dollar is very, very strong. The bond yield is picking up. Gold went down. WTI also dropped, and those two dropped because of the US dollar strength. As many of you know, those two commodities were denominated by US dollar. So it's not because we are in a risk of sentiment per se. It's really the effect of today's market is the strong dollar, and the strong dollar, the reason is because the speculation for a March rate hike from the Federal Reserve, and that's really the main catalyst for the global market. And that, of course, also pressure the US equity a little bit, because once the dollar become more expensive, then that's going to be a pressure for the stock market because money is no longer cheap. But I understand it's not that straightforward because the equity market is still a very high level, and that's because the fiscal policy from administration looking to become kind of a stimulus policy. That will be quite a fuel up for the economy. So it's when we talk about correlation, it doesn't really work like a one-way street, and it doesn't really work right away, like A after A is B, B after B is C. It doesn't really work that way, but it just sort of take into this kind of correlation and logic behind it, just having a big picture in mind. And so right now, that's generally what happened in the market. Now, for our currency view, for Euro, as I mentioned, fundamental data have been promising, but ECB also mentioned they are going to ignore this high inflation for now. And as long as the central bank continue to be dovish, we do think Euro is a negative currency. Now, fundamentally speaking, of course, the elections are still a large negative sentiment for Eurozone. Dutch election is coming up, I think, March 15th or maybe around those time. And then April, of course, is the France election. Now, election, what happened is that a lot of political drama, so it doesn't mean that things will only get volatile in April. Actually, things started to get volatile, month before the election. So we should see more volatility, more downside movement coming to Euro, and we still hold a very bearish view for Euro. US dollar right now is really the strongest currency. Fundamentally, it's data-wise, no doubt about it, it's very strong, but Federal Reserve is really the new fresh catalyst, as really a lot of members change their aspect and become kind of hawkish. So that's really what's pushing dollar up. On top of that, the negative sentiment previously was from one man only, that's Donald Trump. And this Tuesday's congressional speech, what generally the market, of course, he failed to provide another insight, but a lot of articles I read, what market perceive is he became more presidential. People making a lot of details that maybe he stopped wearing those red ties. He become more toned down a lot of time. So basically, the negative sentiment from him has faded out for now. And once you remove that, and then what's left is this fiscal stimulus, Federal Reserve March, May rate hike, and a strong fundamental data. So really, US dollar is the strongest currency right now. British pound right now is still kind of negative. Now the reason is because the sentiment from the Brexit bill. Now Brexit bill right now is still in the parliament. So what happens right now, we have a little bit conflict between the upper house and the lower house. So what happened is that the Prime Minister May wants to limit the freedom of movement for the EU citizens. So basically, after the triggering Article 50, she does not want EU citizens to be able to work in UK or even live in UK like before. And the upper house had a problem with that. They don't want a restriction on that because they sort of feel that it might have some sort of retaliation. Then what happened to the UK citizen wants to go into Euro? So unfortunately, that was part of the referendum deal. A lot of people vote to leave just because they don't want to have EU citizens. So really right now it's sort of a parliamentary battle, and because Prime Minister May, that's what I read, that they don't have the majority in the upper house. So I don't know exactly how that gonna go, but I can tell you, just in a micro perspective, is that it's gonna create some uncertainty. And as I already mentioned, March will be an uncertain month for UK because of this Article 50. So if one thing for sure is that investors hate uncertainty. So that of course becomes a negative sentiment. Now on top of that, previously what's been holding British pound was the economic strength from UK in 2016. However, the recent data had been quite negative for UK. We are not it's just one of few data right now, so it's not really confirmed. But if we fail to see another positive data, and if we continue to see negative data coming out from UK, which tonight we're gonna have service PMI once again, if that's the negative data, then really, fundamentally will become quite negative, and sentimentally it's already negative. That will put British pound in a very negative position. Now, Canadian dollar, as I mentioned before, was a very interesting pair because right now you do have this divergent view of central bank and the fundamental data. So data-wise, there's no doubt that they are performing well. From GDP to employment to inflation, that CAD had been performed quite well. Now, that's internal economic strength. External economic strength, looking at the oil market, also has been quite well supported. Although we do have a large build of crude oil inventory from US shale producers, but the OPEC members are still very resilient to support this oil price. So why is CAD being sold off largely, for this week? It's really because the dovish stance of Bank of Canada. Now the newest statement this week continue to be quite dovish. As I mentioned, you do have a nice inflation, but Bank of Canada saying that's just temporary. They are going to ignore that. You do have a nice GDP, employment, and things like that. They all saying that's just temporary. So I understand a central bank can be very, very subjective, and at the end of the day, the data is the fact. But how you like to interpret it, how you like to view it, it's really depend on the central bank's subjective view. So right now, Bank of Canada is very dovish, and the reason they're very dovish, of course, I think they're very worried about the NAFTA deal, very worried about the trade relationship with US. It's really no joke if US decide to flip the page and not doing any trade with Canada. It's really gonna hurt their business. They might really go into recession. The reason is because that's the only trading partner, the only major trading partner that Canada has. So that's why Bank of Canada is really not kind of worried about that part. So if that's the case, then Canadian dollar will still be quite negative. Now, for that being said, because of the fundamental strength, I think when you pair CAD with weaker currencies such as Japanese yen or Swiss franc, it should still hold up well. But if you pair up with stronger currency, then it's not that well anymore. Only thing you have to watch out is if you do pair it up with Japanese yen or Swiss franc, watch out for the level. You don't want to get in at a high level because Japanese yen and Swiss franc can have a lot of inflow, and that will sink the pair. And that definitely happened to me for my CAD trade. That's how I got stopped out basically. Australia and New Zealand dollar were biggest loser today. Now for Australia, there was more reason to it because of the negative trade balance, and I still think it's resilient currency, and this recent downside movement I think it's just temporary. Eventually you will have a lot of deep buyer comes in, because I understand that Australian dollar still enjoy this high yield. There still has a lot of future to see, especially from the Chinese economy. So really, I don't think in the long-term perspective they are going to downside. They're actually going up. Because of that, I did have some deep buy, as I mentioned before. Now, New Zealand dollar, the downside movement comes down to this, risk sentiment, because there wasn't any catalyst to drive New Zealand dollar down, and New Zealand dollar, fundamentally speaking, is actually stronger than Australian dollar. So, If you putting that into consideration, it's still a currency that's worthwhile to buy, especially against a weaker currency. But watch out for the levels, because I did have a lot of New Zealand pair that almost got stop out or already got stop out, and those really, I will get into that later on when we talk about it, when we are looking at the chart. And that's what happened. You have to watch out. Don't buy too high and don't sell too low. Japanese yen doesn't have much news coming out. We do have the new data for household spending, which was again negative than previous expected number. National core CPI was better than previous expected number, but Tokyo core CPI was a miss. Now, it doesn't matter what that is. If you look at the actual number, 0.2%, 0.3%, those are still way below the 2% target of Bank of Japan. So, fundamentally, it's still not doing well. It's doing better, but way, way below the target. That means that the quantitative easing will continue. That means that Japanese yen will still be a fundamentally bearish currency. Now, sentimentally, of course, it's neutral because of the safe haven inflow. Same thing for Swiss franc, same spot. But as I mentioned, we do think Swiss franc is less attractive even for the safe haven. And that's the reason is because the recent negative sentiment globally was from US, China, and Europe itself. Now, since Switzerland is within Europe, so it's not really some place that people will park their money for now. They will probably prefer Japan more than Swiss franc. Okay, so let's take a look at our trade. Today I don't really have any risk event trade. There are few trades. I'm right now at Cash Swiss, and as I mentioned yesterday, I got in at this 75.50 level around here, 55. And we actually, once, twice, three times, we actually sort of established this support. Of course, I don't know how strong this support is. Now, for me, just to getting very simply is that I think this, if you look at this drop, this movement is way outside the daily range, and I do think it's just temporary. So that's why I'm still in this trade. If you're looking at the daily chart of Cash Swiss, we still have this kind of 200-day moving average. 75.50 seems to be strong enough to hold up well. So that's why I'm still holding it. And of course, like every trade, you definitely have a chance to get stop out. But for me, the reason is just because I think, regardless of how negative sentiment Canadian dollar has, it's still a much stronger currency than Swiss franc, and I think this level is a little bit oversold, so that's why I got into it. I also got into a lot of Aussie trade. First is my Euro Aussie trade. I got in at 39 handle, and stop loss is at 40. And for me, same thing. I think it just went a little bit, too much for this pair. Australian dollar is definitely way stronger than Euro. I also have a pending order for Aussie Swiss. I also have a pending order for Aussie dollar. Now Aussie dollar, it's very interesting because it's a huge drop today. So my pending order is at 76. Stop pending order over 74. So really for me, it's just I ignore this kind of range area. And eventually, one way is going to show me the predominant strength. But for me, the fundamental reason is because Australian dollar is still a very strong currency. So those are the intraday trade I have. Today, we do have the service PMI from UK that is tradable. Other than that, let me take a look at my calendar. Just give me 1 second. Other than that, you have ISM non-manufacturer PMI from US, and then you have few Federal Reserve members speaks. I probably not gonna trade through those things, but understand this is the last speech they have before the rate decision, because I think they're going to have a block out session, meaning that they are not going to be able to make any comments anymore between now until the rate decision. So this will be the last time they give sort of hint about what's about to happen in March. Other than that, let's take a look at our daily trade. I'm just gonna go over the 28 pair and tell you which trade I'm currently either in or got stop on. Sorry. Yep. So Euro Pound. Now Euro Pound, as mentioned, is 200-day moving average holding up well, and now we keep edging higher and higher. Significant resistance, of course, is at 86.50 and 87 or 88.50. Those are all quite significant level. Even right now, 86 will be significant enough if we just draw a sort of resistance 86, 85, 93. Yeah, these are quite a strong resistance area. Now, fundamentally, not something I will touch because I don't have any fundamental bias. Same thing as Euro Swiss, not something I like to touch. Euro dollar, I am in short because of this kangaroo tail. I got in at 0550 handle. Looking back, of course I could got in at 06, but that's always give and take. If you got 06, you might get in at a much better level, but you might miss the trade altogether. If you get a lower level, then you might not able to hit one-on-one. So it's really your personal choice. For me, I'm pretty much not going to get anything better than one-on-one. So I can either wrap everything up at 04 or just say to break even. It really depends on what happened between now and then. But in the general direction, Euro is definitely looking to the downside. Euro Aussie is not looking well. So we got in at least red. So we were in before already, right? As many of you remember, we got in at least red bearish candle. Got us in, draw down, got us in, and then went up again. So what happened is that I basically established a new position and get out of my previous position. So basically nothing has changed. I just got in at a much better level at 38. So, and I put my stop loss at 39.50. As you can see, very, very close to get stop out. And that was, really before all the Australian trade balance and all that. So for me, look at this picture. It's nice. It's a nice picture. It fits into the fundamental pictures. Nice support, resistance zone. 39.50 looks very far away. However, we have this very negative news from Aussie, and market just keep selling it like until now. So we are really 10 pips away from our stop loss previously. Let's see how that's gonna hold up. Well, if I get stop out, that's just the way it is. You always have to be able to take a loss as a trader. But this kind of loss, I don't have any problem because I got in as a nice plan. It goes against me. And many of you say, why don't I use a stop order? Again, it's really your own personal choice. If you use a stop order, you will avoid losers, but you will not get one-on-one in a lot of trade. And a lot of trade I actually wasn't able to get out because of that, because I didn't get in at the right level. I got in at a stop order. And again, I think it's nothing, no method is perfect. It's really depends on how you feel most comfortable. And I feel like right now, because of my fundamental approach, I do tend to like to trade the levels more often than trading the candlestick. Candlestick for me is very important to show the momentum, but I tend to not like to enter with that nowadays. So still experimented for me. We'll see what happens. Now EuroCAD is another trade I'm really looking into right now because we are at a very nice resistance level. Now I'm still gonna wait for a sort of resistance patterns, because for me, without that pattern, it might just be paused and continue going up. So for me, I always want to see some sort of reversal patterns. Doesn't have to be perfect, but it has to give me some nice of reversal patterns. Euro New was the one we got stop out. Now this was really, a terrible trade because of myself. Now what happened is this kangaroo tail was really the one we should have put our pending order at 48. Now we did not do that. We decided to get in at this bearish big shadow, and that's perfectly fine. What happens is that we should have either grab our profit at 46 or even at least set to break even. This is what I'm trying to say. Like, nothing is perfect because I'm trying to play with label, but I'm also trying to play with candle, and sometimes it kind of confusing for myself. So if I getting at 48, definitely 46 will be good enough for me to say to break even. If I get into at this candle, then 46 still should be good enough for me to say to break even. So this is really my own problem, that I should have said to break even, but I'm afraid that I say to break even, it will break even me out it will stop me out break even and keep going lower. But unfortunately, in this case, it actually went even higher to stop me out altogether. So this was, again, unpredictable, but definitely manageable. So this is not a good loss for me. This is something I messed up, and that's something I need to learn. Euro yen, don't really have anything much to say about this pair. Same as pound Swiss, not something I will pay attention to. Cable, of course, is the one we are in. 25 handle, 27.25, nice stop loss. We move our stop loss to break even already because we reach 1-on-1. Now, my target is actually at 20, very low here. Eventually, of course, I do think it's gonna reach it, but it's very possible to went up and stop us out. So give and take, again, this is really, for me, I think exit is really a hard part for traders, because entry is always much easier, but how you exit, how you management, that's really the art of trading. So for me, it's something I'm still learning, still practicing, still getting better at. So one-on-one you can always wrap up, of course, but it depends. For me, it's depending on the fundamental bias. Right now, I think in this month particularly, that US dollar is going to be a lot more stronger than British pound, both fundamentally and sentimentally. The only thing I'm worried is that market seems to get ahead of itself right now for a March rate hike. So once that rate hike does not happen, we might see a large rebound in US dollar. The rate hike, we still have 2 weeks to go, but next week we also have NFP. So all those things might be a lot of rebound for US dollar. But I'm holding it right now just because it's still a strong currency. The fundamental bias is still very strong. So we'll see what happened. Pound Aussie, I am interested to get into right now. Don't have any signal, not really at nice level, maybe a little bit higher. Now this one I mentioned before, what a shame, got in at a nice thing and we didn't hold up well. So that's the trade that you move to break even, you get stop out. The trade you didn't move to break even, you also get stop out. And the thing is that it will happen, but you cannot just change your style like that, because eventually you are going to lose twice. And that's what happened to me. So you have to pick one and be consistent enough. You either say that, okay, I'm the person who's going to move to break even when I have one-on-one, or you say I'm a person who is not going to do anything until I hit my target. So both methods are fine. They both have their advantage and disadvantage. The bottom line is you got to pick one and stick with that. Okay, that's very, very important. Pound CAD, I did not get in. Of course, I got a trade, I think, at 65. So for me, 65 is a nice level, and this is something I'm just looking to hold up longer. So this is more like a swing play at the level. I do, for me, it's nice to have this kind of reversal signal. 1, 2, 3 and 4. It just shows you 65 is strong enough, and we'll see if we get any update in this trade. Pound USD, same thing, is something I'm holding right now. 75, let's see if we can get filled. We didn't really touch 75 at all, so I'm hoping to get that strength final push up. If we can get filled at 75, that's perfect, because I think it's a very strong resistance. So we'll see what happened. Pound yen, nothing much in this pair, same as Swiss franc, Japanese yen. Dollar Swiss, we actually finally break through this 0.01, and this is significant enough. Nice support, nice resistance area now becomes support. So the fundamental bias is huge enough. I'm really looking to see this one touch 0.2, eventually 0.3. Again, the thing is that you will have a lot of swing up and down, and sometimes those swing ups and down will stop you out if you move to break even too fast. But if you don't move to break even, sometimes the market change. Right now I'm still holding it. I do think US dollar will enjoy this momentum until the rate meeting, which is about 2 weeks to come, and it's really depending on what happened to the result. A lot of people will start buying the rumor right now. So same thing as dollar yen. Keep going up. We still fail to reach 115. That's something I'm really not happy to see, but nevertheless, I'm holding this trade right now. I have a tight stop loss, and I have a lot of order in this one previously, so I basically readjust my position because I have about 3% before in this one pair, and that's never the good thing. I mean, no matter how strong confidence you have, I don't like to lose more than 1% in currency, especially in pairs. So I had a 3% in this pair previously, just playing with the levels, but I readjust my position, took some profit off. Right now the overall risk capital is 1%. The overall entry is at 112.80, and 111.25 is the stop loss point. So I do think this is a nice stop loss point. We haven't been able to touch it since November 28, 2016. So right now, especially right now, the new fresh catalyst, I do hope this thing to keep going up. We'll see what happens to 115. I really want to see a break above and close above 115. If we're able to do that in the next couple of days, that would be a very significant strength for dollar yen. However, if we fail to do that, we might retouch 112 again. So we'll see what happened. Dollar CAD, obviously, dollar strength versus CAD weakness, you really went up about 300 pips. It's very significant for this pair. Your range is less than 100 pips. You already have this update non-stop for 300 pips. So we are definitely due for a pullback, but look at dollar CAD, high was at 36, so it can keep going higher for sure. And if we have a pullback, I might look into get into it, but definitely watch out for the level. You don't want to buy at high. Aussie Swiss is the pair we are currently in, not looking well, of course. This one, I think we got in at here. So previously, again, buy at the breakout. So this has been, like for a long time. I didn't get in at a good level. That's the first thing, and that's the risk. When you buy at a breakout, you always have to know when you buy at a breakout, the reason you buy at a breakout is because you're hoping that the resistance will become a new support. If that does not happen, then you actually buy at a high, you buy at a resistance, which is the worst case scenario. And that's what happened to me. So this there, definitely didn't really go any higher. Went higher, 78. Same thing, we could have said to break even, and the worst case is we just get stopped out. But right now, nevertheless, we're still holding it. Want to see how it play out. This is obviously a strong support at 76.35. I'll just say 50. Make it a wrong number. So 76.50 will be a significant support. We'll see how 50 holds up. If it fail to hold up, then the next one will be 76. It should drop there. So we'll see what happens, but definitely not something I think I managed it poorly, basically. Aussie dollar was another thing, previously remember we got a short at 76.50, stop loss at 77.50. If we had hold this pair, we would have one-on-one, and it was a perfect trade. However, I messed up again because I over leveraged. So I think really my execution, definitely I am not a good executioner, really kind of, and that's why the frustrating part is that you get a general direction correct, but you manage it poorly, so you lose money. So for me, if I had gotten, because originally I got a 76.50, because I think Aussie is very, very high, and dollar is still a much stronger currency, so we should taste the bottom, and it really what happened perfectly, but we got out because we are over leveraged nevertheless. So now we are looking to taste this 75, this 200 moving average again. So we'll see what happens in this pair. If we can have any reversal signal at 75, definitely will be a good level to get in. Aussie CAD, also a huge drop today for Australian dollar. Also, at 1.01 or 1.0, all this is a nice support zone to get into it. Aussie New Z, this again not looking well. We got in with this red bullish bearish kangaroo, bearish big shadow, work out a little bit, and huge nasty drawdown. Right now 107.51 seems to be holding well, but I wouldn't put too much faith or confidence into this one. So we'll see what happens. Now, if you ask me what could have done better, I think I could have maybe get into a 70.07. That maybe would be a much better trade. But actually, I don't think there's anything I can do better, because I could get at 60.50, stop loss at 70.50, and I would get stop out already anyway. So really, for me, fundamental bias is still favor for New Zealand dollar, but sentimentally it's still favor for Australian dollar. Now Aussie yen is the trade. We currently have a pending order at 86. Now if we get filled, this is a nice level that I like to get in. Of course 85 will be good too, but we might not reach that low. And if you look at this diagonal trend line, we are still in this kind of uptrend. So 86 will be nice for me to get in, and 84.50 will be good enough to have this low as a stop loss. So we'll see what happened. Cash Swiss is also the one we getting, and right now it's nasty drawdown. Now this, on the other hand, is not such a bad trade for me, because originally I got in at 76.50, and it was a good support zone. If you look at it, it's not. If you look at just previous, it's not a bad support zone. You touch here once here, you break out. Looks like you reestablish. Now this is a support area. So I was happy I got filled, and was really looking forward for it to keep going higher. And then here we count this huge nasty drop. Now this was really not preventable, because this is really just a new catalyst. I don't even know why we have this large drop, to be honest with you, because fundamentally nothing had changed. Even the Bank of Canada monetary policy statement was such a short statement, was nothing new, but nevertheless market got very panicked over it and decided to sell it. So right now moving average, this 75.50 is our last support, and we will see how it holds up. And this is really a nice area too. If I'm flat, this will be a nice area I would want to get in. Cash Swiss. Now Cayenne is basically exactly same thing. We got in and got stop out at this 85 area. So 85 again, this will be a nice area to get in. I'm hoping to see a sort of reversal signal first, because so far we don't have it. We have this red candle, green candle, and just sideways movement. But if I have another reversal signal, I might just put a pending order here, and then you could put stop loss at 84 if you want a tight stop loss, or you can put at 83 if you want to be safer. Really depend on your personal choice. But I do think Cayenne does have enough fundamental strength bias to keep going higher. UT Swiss, I think we got stop out in this one. So unfortunately, 71.42 was our stop loss. We got in at here, and I don't know how can I manage it well, but this is my again a bad management, because again what I can do is I got in with this green candle and I said I'm gonna move to break even at 73. I did hit 73 and I did not move to break even because I was like, oh, I don't want to get stop out break even and lose the trade. And that's what happened. I not only got stop out at break even point, I got stop out completely. So what I could have done is to either get in with this candle high and move to break even, and the worst case you get stop out at break even, or getting at 72, which we will not get filled until here. But if we get into a 72, we most likely put our stop loss at 71. So we should still be able to hold on well, but nevertheless we might get stop out altogether. So not a good trade for this one. I think we also got stop out in this one too. New Zealand dollar was another terrible trade. So lots of this kind of bearish movement for New Zealand dollar, and really, sometimes you just have to, this kind of movement is just such a large movement. This one is not a bad trade for me because I got in at the existing information. It was a nice level. This was prior to the Donald Trump speech, prior to the Federal Reserve member. 72 was a nice level. I even got a 71.75, and the stop loss was way below 200-day moving average. But you just got stop out. New Zealand CAD and New Zealand Yen. So again, New Zealand was really turning against us also. So lots of New Zealand weakness right now without any significant reason, and that's just the way it is. Sometimes this kind of sentiment is very, very strong. Okay, so that's pretty much what I have right now. I don't have any new trade. We'll see how things play out. And just understand losing is part of the game, and be careful with your label or leverage. Okay, so I'll be back tomorrow with another daily analysis. Hope you enjoyed this video. Let me know if you have any questions. Thanks for watching. Bye bye.